The Swiss National Bank is escalating its stance against Bitcoin and refuses to hold it. And the reason will shock you. The reason is that Bitcoin is software, and software is always prone to errors. This is absolutely mind-blowing. Here, Switzerland is throwing away a massive opportunity. And the reasoning is not even particularly accurate. We look at what the Swiss Central Bank said about Bitcoin in a new interview. And it really will knock your socks off when you hear these justifications and these claims here. Then we have a very, very exciting new assessment from Robert Kiyosaki, who writes about whether Bitcoin is a scam or not. And then I found a really, really interesting clip from Thomas Mayer, a stock and finance expert. For many, many years, a banking insider who offers a very, very interesting and somewhat critical perspective on Bitcoin, and also about gold, and regarding the current events. First, let's take a look at this. Check out this brand new interview with Martin Schlegel from the central bank here in Switzerland. And here it clearly states, Switzerland has no interest in holding Bitcoin. And then a justification is given here. Here it says, hey, the Swiss National Bank rejects the demands. The central bank should hold Bitcoin on the grounds that it's software. And we all know that software can have bugs and other vulnerabilities. And this is actually no joke, no April Fools. That's a quote from Martin Schlegel, the president of the Swiss National Bank, or the central bank. And what's interesting is they're taking shots at Bitcoin, saying it's software so it can have errors. But if we take a look at what the fiat money system is, that's also software. So there's also a computer code behind it or something. So we also have banks that have a ledger, a cash book. But the difference is that this ledger at regular banks is centrally controlled. But how many times have we seen it already? That there have been some errors in the past, that banks have gone down and stuff like that. You can also say that the SWIFT system, or when you do an IBAN transaction or something like that, there's also a computer code running in the background. It's not like it's physical gold or anything. So he's putting it out there like, yes, software is unsafe. And now we're going back to gold or something. Then I might somewhat understand the argument, but even then it wouldn't make any sense. But that argument makes absolutely no sense when you compare Bitcoin to fiat money. The Swiss franc is also kind of digital here. So we don't really have any physical gold anymore. Sure, we still have cash like 5% or 3%. Let me know in the comments how much is still paid in cash each year or something like that. Or maybe it's just 10%, I don't know. That's really the physical gold, but everything else is digital. Also, the creation of credit money, when you get demand deposits or something like that, is basically the creation of demand deposits by private banks, which then just rely on minimum reserve requirements. Issuing new loans when someone takes out a mortgage or something like that, then there's just a little balance sheet trick. You just press a button on the computer, and then it basically becomes digital. New gold created. And now the president of the Swiss National Bank actually comes out and says, hey, we can't use Bitcoin as a reserve asset because it's digital, it's software, and software can have errors. In principle, that's true about the software, but the difference is that Bitcoin is open source. And our fiat gold isn't really open source. And that's why Bitcoin software is definitely superior to the central bank software here. It's completely incomprehensible. To me, they're really missing out on all the chances to be a first mover here, especially since there's an initiative in Switzerland that I think is actually quite successful. I think there are really quite a few voices coming together that want to bring Bitcoin into the Swiss National Bank. But of course, it's a very long process with such an initiative until you have enough signatures. And from the looks of things here, this is probably just a bogus argument. That means that the argument here is not really objective, because any elementary school student can dismantle the argument. I mean, you don't even have to be a finance expert, you don't even have to be a Bitcoin expert, and you definitely don't have to be a central banker to understand that his argument makes absolutely no sense. But it could just be that they're putting out some superficial arguments to the public. That means you simply have your basic attitude here. But your argument is not strong enough if you don't understand Bitcoin. And that's why people just throw out pseudo-quotes, pseudo-arguments, and say, hey, like that. And that's how it looks. Bitcoin is really bad because, well, the Swiss franc could be threatened. But if we take a look here, the interesting part was actually, there were also some really great questions that were asked here. So there was an article with the interview and all that. And here it says, the franc seems to be more desirable than ever, says the president. And then he continues to quote, we are not afraid of competition from cryptocurrencies. So he was asked if he's afraid of cryptocurrencies. And that's exactly what I was just talking about. If you are afraid of Bitcoin, for example, then I could at least understand why they'd throw out such nonsense arguments. But apparently, the central banker up on his high horse says, no, we're not afraid of cryptocurrencies. So it has to either be a misunderstanding here, or there's just a lack of know-how, or it's just, let's say, pure stupidity. It could also be that he's just as dumb as a rock or something, although I don't think he's totally stupid, because otherwise I'd say, maybe central bankers aren't the brightest bulbs. The brightest minds but at least they have to have a bit of something going on upstairs and so on. They might have bad intuitions, but just because someone has bad intuitions doesn't automatically mean they're completely stupid or have no IQ or anything like that. I don't want to accuse him of stupidity here. Maybe it's not even bad intuition. Maybe it's just a misunderstanding, not having looked into Bitcoin enough. I don't know. Write it in the comments if you can explain to me how the Swiss National Bank comes up with such reasoning. I've always had a lot of respect for the Swiss National Bank because they're really good with their gold. They have a very, very strong currency. This also shows that fiat currencies do not always have to inflate to the maximum. They have some really, really good assets on their balance sheet. That means they are actually doing it very, very smartly. And actually, Bitcoin would fit perfectly into the central bank strategy here, but somehow, Schlegel doesn't seem to have that on his radar. He also says that cryptocurrencies don't meet the essential characteristics that a good currency should have, Schlegel said. So, as I understand it, a currency has to be forced to depreciate. That's probably a characteristic that a currency needs in some way. If a currency isn't chronically depreciating in some way, then it's just not a good currency. And then he says here, secondly, our reserves need to be highly liquid so that they can be quickly used for monetary policy purposes if needed. I don't know what the problem is supposed to be. By the way, Christine Lagarde made exactly the same argument. With the liquidity that it's not liquid. That's also a ridiculous argument, more like a strawman argument. They're just making something up. They probably asked ChatGPT, hey, give me 3 arguments on how I can really mislead people here. Give me like 3 standard arguments that I can throw out in an interview. Then it says here, thirdly, cryptocurrencies have security flaws. They are essentially software. And yeah, we all know that software can have bugs and other weaknesses. And then, I already introduced that to you earlier, that argument is nonsense. The only understandable argument that comes up is that they say we're still talking about a niche phenomenon because Bitcoin only has a market capitalization of 2 trillion Swiss francs. I can understand that argument. So that would make sense here, at least that argument, because a lot of big investors are just looking at, okay, where's the market capitalization? If it's too small, then they're not going to invest in those kinds of assets. So I find it a very questionable. I'll call it criticism. But feel free to let me know in the comments if you can make sense of the criticism. Then something else really, really interesting happened here. So Robert Kiyosaki is writing another new post on X. And this one is also very, very controversial. And he's basically tying this back to what the Swiss Central Bank is trying to address or solve. Because Bitcoin is often accused of being a scam. And Robert Kiyosaki is now writing on X. And that has almost 500,000 views. He writes here, is Bitcoin a scam? And now he says here, it could be, maybe it's a scam, but not as big of a scam as the US dollar and the US banking system. And this isn't just happening in the US, it's also in Europe, like it's in Switzerland, it's everywhere, right? Starting with the Federal Reserve, which is the central bank of the USA. They are banksters. For example, if they fail and lose billions, the criminals at the Fed bail them out. They should go to jail. This criminal enterprise can't last much longer. I'm predicting a collapse of our financial system. Please protect yourself from the banksters. Buy real gold, silver, and Bitcoin. No gold, silver, or Bitcoin ETFs. So here, really physical gold, physical silver. Some people also wrote last time. Jokingly, I said, buy physical Bitcoin. What I mean is, of course, that Bitcoin isn't physical here, but I mean that you have your own keys, your own passwords that you then stash somewhere, like on a flash drive or something like that. So you don't really have something like physical Bitcoin, but kind of because the Bitcoins are on the blockchain, you have to mention that too. And he made it very clear. Don't buy Bitcoin ETFs, buy real Bitcoin. Also, I'll include a link to a Dresser hardware wallet. Definitely check that out. If you don't buy a Dresser hardware wallet, make sure you get Bitcoin in self-custody. You're at the mercy of some banksters or people who can manipulate or censor your ETFs. And who knows what else they can do. So definitely check it out down here. With the code Bitcoin Hotel, you can still get a 10% discount when buying a Dresser hardware wallet. Now, Robert Kiyosaki is saying, this is the gold of the banksters. So if you're using ETFs or something like that, it definitely means you need to have physical gold, physical silver. And I'm just going to say this. Physical Bitcoin, even though there's no such thing as physical Bitcoin, it's really just Bitcoin in self-custody. And then I actually found a really interesting clip here from Thomas Mayer. Thomas Mayer, I believe, is actually a banking insider with a long history in the stock market, a finance pro for many, many years. Although you always have to look at the term finance pro very, very critically, but still, he really has a very, very interesting perspective, also a somewhat critical view on the whole markets and how things currently look. With Bitcoin, it's all about gold, and just check it out. I'm putting the link to the whole interview down below. But this is really interesting.
You've also been around for a long time, Mr. Mayer, of course, working with the big banks worldwide. I'd definitely be interested in your opinion on what you think about the ever-increasing gold price right now. But also regarding Bitcoin, because in the US, they're considering possibly including Bitcoin in some kind of state reserve or sovereign fund. However, they might ultimately decide to structure it. So, what do you think? Both from gold and then secondly from Bitcoin.
So gold is the old. Gold, the alternative gold. I think a big factor in the rise of the gold price is that people don't really trust gold. We've seen that the central bankers are kind of stumbling around in the dark. They didn't see the inflation coming, then they tried to fight it. Okay, then it looked good, and now it's coming back. So, when you look at it, you have to say, yeah, I really don't want to trust this gold all that much. Look, the loss of purchasing power is huge. They say 2% per year, yeah. That adds up to huge amounts. The threshold is 0. So, if you have 2% gold per year, if you keep that going infinitely, then in the end, the purchasing power is 0. So that's not exactly a business model that really inspires investors. With gold, the expected purchasing power is not 0, because gold is only limited in availability, and there's no one there who specifically, just let that sink in for a moment, who specifically destroys the currency. The central bankers are intentionally destroying the currency. As an investor, I have to say stuff like this. With that, I might be able to pay my bills. But if I have something left over, then it has to go somewhere else. That's why I believe this is a very important factor. Then with gold, there's also the fact that we're back to geopolitics. The so-called Global South, a silly term. That's China. Other big countries, India, Brazil. They're no longer tied into Pax Americana. Rivalries are developing there. We now have a state anarchy, that's what it's called. The political scientist Mr. Munkler, anarchy of states. And of course, they want to become independent from the dollar. The Americans have used the dollar as a weapon. If anyone wanted to make payments and the Americans didn't like it, they would block it. Iran has noticed that. Now they're coming out and saying, we want to become independent from that. So that's the second factor when it comes to gold. So in that sense, I'm for gold. Still, very optimistic. I think that's something that's coming now. That's basically the gold for the tech savvy. Of course, Bitcoin has the advantage over fiat currencies that it's limited with only 21 million coins. But at some point, it's over. That's the anti-fiat currency. Well, the official gold. Telling people, I want to ruin gold. The Bitcoin people say, I want to preserve the purchasing power of this gold. And in this respect, I continue to see a good demand for it. Honestly, I don't really get why Trump and others are doing that. Maybe he has some ideas behind it that he can quickly pull off a bug, or something like that. With him, you never know how rationally he thinks things through. But from the user's perspective, from the investor's perspective, it makes sense. Having gold that isn't systematically destroyed by the authorities.
So that's definitely a very, very interesting perspective where you just say, okay, hey, if we have corrupt gold, if we have gold that's constantly being devalued, then it might make sense to use decentralized, independent gold here. And then you can also say, like Satoshi, just in case it catches on, get some Bitcoin. So you guys have a bit of Bitcoin, right? Or you can see it as a backup plan or something like that in case everything goes south here. And he says there are massive problems coming our way. And that's why people are getting into gold, into silver. And that's why people are getting into Bitcoin. And if you want to buy Bitcoin now, I'll put a link down below for you. 21 Bitcoin, how you can easily, safely, and simply buy Bitcoin. With the code, you can get up to 20% off the fees when buying Bitcoin. Absolutely recommend it. It's super simple, super easy. For beginners, for pros, there are limit orders and savings plans here. A whole bunch of things, even wallet transfer functions, we can transfer it directly to your wallet. For the dresser hardware or anything else, let me know in the comments what you think about the current developments. Until then, peace.